You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Welcome to the show, Danielle.
Thank you, Jim.
Major corporations and the government just a little too close for comfort. Danielle, you believe that corporate government nepotism is a big money loser for Canadians and people in general across the planet.
Well, this is not a new story, of course, but it has been one that's becoming excruciatingly clear of late. And, with all the widening disparity between the haves and the have-nots. And, I think that's something that people talk about, and depending on, your particular affiliation, you may find that a ridiculous topic or, exactly something that's very serious. But I think the thing that people have to appreciate is the reason we're seeing so much fallout in places like Baltimore and many other places in the world right now, Greece, protests left and right, even Montreal, students, the whole 9 yards. It's because people are under intense financial pressure in general, the majority of people. And that comes from, all these years of basically unsustainable spending habits that have been propped up through debt and the usage of debt. So even though rates are extremely low, people are saturated and their income has not gone up. In fact, in the last few years, real wages have been basically flat. Canada, for example, our employment rate has never recovered back to where it was before the Great Recession. So we haven't had any additional income in the system to help people consume more. They've just done it through debt. So what happens is, that's a long way back to what you initially said, but the point is that there's this, small fraction of the populace that has been extracting more and more money from the system, and essentially their gains are the deficits that are reflected in the rest of the economy. So, the multinationals that have got sweet deals and the executives that run them have been, the 0.1% of the population, never mind the 1%. And that chart of income equality, if you look at it that I put on the blog, the 0.01% of the populace, their income has tracked exactly with the credit bubble the past few years. So when you see that top blue line, it looks like the S&P 500 or, any of the major stock indices, and that's because that's where the bulk of their compensation comes from, through the getting stock prices up, but then it crashes with the stock market. Then you saw the bailout response that came from the government to the private sector. And so all those funds that were taken out of the real economy and put into propping up these failed institutions have left deficits everywhere else, and financial bubbles which are wreaking havoc around the world. So it's there's a connection there, and this nepotism, as I call it, this revolving door, Ben Bernanke getting the sweet gigs after he leaves policy positions. There's this revolving door between policy and corporations all over the world, and that has been just one of the major factors. That, and now they have such lobbying power, they're controlling, tax policy, and they have loopholes, and they have also just lack of personal accountability because, all of these corporations, the ones that have been making, breaching law left and right and making off like bandits, are not having to take any personal accountability to the actors involved. So this is one of the main forces, in my view, as to why we have this huge disparity. It's not just that some people make more than others. Obviously, that's always been the case. But it's in the past 20 years in particular, this corporate welfare, this bailing out of companies at the expense of the public purse has left these, IOUs in the drawer in all the other major programs. And now that people are so encumbered with that and systems are so encumbered with that and there's less cash flow available, it becomes extremely obvious what's happened. So I think that's why we're going to see a lot more backlash and, uprising. And as I say, when people have little to lose, they have everything to win through revolt and, pushing back on the status quo. And I'm afraid that's where we are at the moment.
As you pointed out in one of your charts, the so-called 1%, their wealth is about to surpass that of the other 99%. That's a scary number.
Well, that's one statistic. And again, if you look at that chart, you see that, the top 1%, relative to the other 99 is right at the very bottom of that scale. So as much as that stat seems remarkable, and it is pretty remarkable that 1% of the world's population is on track to overtake the wealth of the other 99%, that is one statistic for sure. But I think that you have to drill down more to see, where the really egregious differentials are coming in. And, it's not people of the world who save and work hard that we are trying to in any way, demolish here or say they aren't worthy or deserving of the fruits of their labor. It's nothing to do with that. It's a reality check with the fact that this 0.01%, the policies of the past 20 years of central bank liquidity, of central banks gone wild, basically propping up asset prices at all costs, literally all costs to everything else, that has unduly benefited a very small fraction of the populace. And that populace is now also, for example, 0.01% of American population is 25,000 people who happen to also be contributing 40% of the political contributions today. And there's a smaller version of that playing out in other countries, including Canada. And as we head into these elections this fall, I think that there has to be some recognition of how this surplus in that small populace is related to these huge deficits everywhere else. And it's, again, as I say, it's not disliking anyone who's earning the just deserts of their labor. It's about that there's a dictatorship environment at work here, where these people are so domineering of policy and so queering everything in their own support that they've really doing a huge disservice to democracy, fairness, and the ability to have upward mobility in the masses. And I think that's the real problem. It's not about trying to make everyone the same. It's about looking at such extremely unfair advantage that a small percentage of the population are now wielding. And we have to, I list a bunch of stuff I think that's key in terms of how to get back to a more balanced system. Because balance is actually in everybody's best interest, right? We want customers, we want people to be upwardly mobile, we want people to want to better themselves and to avail themselves of things like education. All that is extremely important for the upward mobility of the society. But right now you've got the corporations and certain sort of elite wealth, not everybody, of course, in that cohort, but a certain amount of them who are basically as damaging as a dictatorship in trying to direct policy that is totally in their best interests, as they say, at the expense of everything else.
Yes, the real number here, 25,000 Americans are basically running the affairs of 330 million people.
Right, and I mean, some of that, people are pretty complacent, and in general, most people don't pay attention to, political matters, and they don't really get involved, and they don't pay attention to news and read things as much as they should. So I'm not saying this is just all any one person's fault, but I'm saying that in the process we have allowed, certain people to have undue influence. And that goes back to, we've got too many multinational, enormous corporations. We did this in the Standard Oils of the world back at the turn of the century, where they just got so big and so oppressive to policy and directing everything, politics, everything in their favor, that they basically broke them up. They said, this is an antitrust issue. It's no longer good for the economy to have monopolies that are, in charge of so much of what happens in the world. And so you do things like break them up. You do things like stop the revolving door, make there a cooling off period of at least a couple of years before people can come out of public office and go back into corporations and sort of sell their insider information. You have to have limitations on political contributions. You have to, there's a whole list of stuff that I put on the blog. But basically, we know how to fix it. We know how to improve it greatly, let's put it that way. But right now, we've got a lot of work to do.
And what about Canada, where three major corporations control the majority of broadcasting outlets?
So again, this is not a healthy thing. It's not a healthy thing for open discourse, for diverse message. I go back to strength comes in a balance in the process, not by any one side having a dominant influence that quashes everything else. And I think anyone that's intellectually honest or is in favor of growth in terms of, just human growth, in terms of improving things in the society, wants to have a legitimate discussion, doesn't want to be the dictator, that basically rigs it all their way. And Elizabeth Warren's been talking about a lot of this stuff, right? Senator Warren, in her speech at the Minsky conference last week, again, something I put on the blog, but she basically points out, listen, this is about certain influences rigging a system so much in their favor that they are extracting all of the hope and potential out of most other parts of our society. And, another great example, Jim, this week we saw that there was the arrest of the HFT, the London HFT trader, who now authorities, 5 years later are trying to say caused the, quote, flash crash of May 2010. This thing stinks to high heaven, right? Because this person that they've now pegged this on right at the final hour is an independent guy trading in his mom and dad's basement, okay? So I'm not saying that what he did was not contributory to the problems that happened in the flash crash, but the fact is that we've had flash crashes continually throughout the last 5 years, that it's the HFTs that are causing a great deal of instability and risk for everybody else that's trying to use markets for their normal public function, and that all the institutions, the big banks and the large hedge funds, like Ben Bernanke going to work for Citadel, one of the biggest HFT firms in the world, the head of the CFTC, the Commodities Future Trading Exchange, Bart Chilton, took a job with, one of the largest HFT lobby firms last year after he left. And these are the people that were at the helm of supposedly watching over the markets when all this stuff was going on. And they, no one's come back to them and said, you didn't do your job. In fact, they've been promoted to these lucrative positions because they came out of those policy positions. It just, the nepotism and the inappropriate influence and bias is just repugnant. And so they have to come up with a scapegoat for why the system is so messed up, and they go pick this individual guy who, doesn't taint his firm or the industry in general. They can say this guy was rogue. Well, the fact is that Nanax and all these other great services have been providing evidence daily of flash crashes and the trail and exactly who's been causing what mayhem to the regulators for years. And they have done zero about it because everybody is on the take now. Those people are receiving huge financial inflows from the very firms they're meant to be regulating. So, of course, nothing's happening in a substantive way. And a very interesting example was Twitter this week. I don't know if you noticed that, but Twitter, there was a leak of their quarterly earnings, and the stock started to tank, and they shut down the trading. This is another thing that happens routinely now in markets. Bizarre activity happens, and they declare self-help, and exchanges close because there's so many pistons blowing all over the place with the trading patterns that have been happening. These rapid speed, a fleeting volume that's deleted after the fact is just nuts. But Twitter was, someone leaked, that's bad enough, but leaking has become really commonplace. In fact, some people are just paying for advance notice of information, which is, again, non-public until it's released to the public and therefore is illegal to trade on. But this has been widely done. And so not only did HFTers, start wailing on Twitter before the news hit the public market, but it dropped 18% in 60 seconds, Jim, when it reopened for trading. And so my point is, obviously, real investors haven't got a hope of navigating these markets when, people are getting advance notice, paying for it brazenly. Everybody knows that's happening. And second of all, these co-location and rapid trading, unfair advantage being given to a certain amount with this rapid technology, pension funds and anybody who's trying to invest in these markets just gets, clobbered. It's like if you're in for a penny, you're in for a clubbing. It's just, so it's really, anyway, it's a farcical arrangement that has really devolved to stuff our ancestors could never have envisioned. The degree of leverage in the world, the $555 trillion in the derivatives market, mind-boggling numbers that make no sense. Here's another little point I was thinking about in that statistic. So derivatives are these securities that are supposed to be based on, assets, tangible assets on planet Earth. Well, in the last 7 years, we've added hundreds of trillions of derivatives. But think about that. Have we added new real estate on planet Earth? Of course not. The Earth is still the same size, but we've got all these additional leverage on leverage on leverage. So this is just in no one's best interest, except, the people they bailed out in 2008, who've now got even more emboldened and more outrageous and more unfair. So we really do have to somehow put this genie back in the box.
Well, you have 8 suggestions on how to improve the system. Could you maybe outline some of those suggestions?
Oh, well, it's all going back to things we've had in the past, things that make sense. You can't have salesmen giving advice. You can't have these multinational conglomerates that are so big that no one can regulate them and no one can even follow, and the CEOs are sitting dual positions, chairman and president, which is a farce in itself. The board's supposed to be there to, oversee what's going on with the executives of a company. When we have the commingling of the chair of the board with the president or the CEO of the company, of course, there's no division of power there. There's no, sober second thought on anything that's going on. That shouldn't be allowed. We have to get more. We have to stop the ability of companies to plead guilty or pay fines without taking personal responsibility into the actors who are the directing minds of these egregious offenses. The Glass-Steagall division between banks and security debt brokers, risk sellers. That's all obvious. We have to stop the curtail greatly the amount of lobbying that's going on behind closed doors. I said a long time ago, I think public presentations should be the extent of any lobbying that's allowed. So you could literally have open court days where, lobbyists or lawyers who are hired to advance the interests of a particular sector go in and do an open forum presentation that anyone can follow or watch, or anyone can come and know what the submissions are. And that should be the extent of lobbying. It shouldn't be any of the behind doors, closed, secretive agreements between government and business. This stuff is just toxic for anything that's positive or productive.
Well, we're seeing in the city of Vancouver right now, the people who worked for the political party that got elected into City Hall is now getting all the jobs and all the contracts.
Yeah. So there needs to be, you're never going to get rid of all this stuff because human nature is what it is. But we are in a period where what's happened is all the divisions that were helpful, all the, keeping people honest, all the ethical stuff that we've evolved over centuries to know, that this causes problems, so we won't let these particular forces line up. We took all that away in the past few years, and everyone's sort of got not everyone, but there's a great deal of this sort of, well, they're getting away with it, or they're taking, so will I. And I think that's why we're having this breakdown, literally breakdown in the social fabric. And we have these debt monsters everywhere we look, as evidence of the fact that the policies we've been doing are not sustainable and can't continue.
Well, they say so many of your big corporate deals are done on the golf course. Where's the public scrutiny in that?
Well, you're not going to have, as I say, you're not going to be able to prevent business from talking to government, but I'm just saying there needs to be some hard limits on the amount of influence in terms of money given in the contribution process, and in terms of the lobbying has to be much more transparent and much more like an open forum presentation, so that people can debate and give an opposing view, and then there can be sort of a almost like a quasi-judicial process where people then go back and try and figure out what policy makes sense. And as I say, having that severance between policy and corporations, there needs to be a cooling off period. You can't just go from one to the other, because we're paying a heavy price here for that. And so anyway, yeah. So that, and the economy continues to slow. So it's back to it's not working, folks. The whole QE stuff, which has been this massive way to bail out the financial sector the past 5-6 years. The Bank of Japan announced their last big boom with Abenomics in April of 2013, saying they're going to create inflation of 2% within 2 years and all that. Well, guess what? They're headed back down towards zero. U.S. inflation headed back down towards zero. The U.S. GDP data yesterday came in at barely above zero. And if you counted the massive inventory builds, which was the highest ever on record, Jim, we would have had negative GDP growth in January. And that means we've now got too much inventory, going into the second quarter, which is going to be negative for growth in the second quarter. So the writing is just on the wall everywhere you look, and the only thing that the current policymakers have, quote, in their favor or evidence that they're being at all effective in what they're doing is that they have massive bubble in valuations in many asset classes around the world. And they look at that and say, well, see, it's working. Well, at some point, the world has to say, no, it's not working. It's a disaster, and now we've got a hell of a mess to clean up. And, I think that day moves closer because, things like this, the big reversion in oil is also tied into this. There was this rampant trading and speculating and derivatives in the oil and gas sector in the past few years. Again, that brought in this huge amount of supply, overpriced everything, which brought on more supply, and now we've got the boom, the bust after the boom, right? And now we're facing, companies that are most over-levered, not prepared, governments that aren't prepared, and great instability again.
We'll have more with Danielle Park right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Danielle Park, the editor of the popular blog Juggling Dynamite. Danielle, the low birth rate in Canada and the U.S., a big concern for our future economy.
You get steadily declining birth rates with education levels in women, for sure, and with the wealth in a particular country, because, people have reason to want to do other things. They have access to, employment, and they have access to various things other than just staying home, I guess. So, it's quite a normal development. But what's happening right now in the U.S. is abnormal, and that is one of the things that the U.S. has had in its favor, and indeed North America has had in its favor in the past many years, is this constant influx of immigrants, right? People wanting to come to North America for all the freedom and possibility that it represented over other regimes and countries. So that's still there. A lot of immigrants still want to come. But the other thing was that we had a healthy birth rate. So we had a replacement of our population because we had, people had a decent level of standard of living, and they weren't having 4 and 5 kids, but they were having 2 and a little bit more, on average. So what's happened since the Great Recession is that the birth rate is now the lowest it's been, and the reason is for the cohort of people, the 18 to 34s, which are commonly referred to as the millennials. So there's 75 million American millennials between the ages of 18 and 34, which is comparable in terms of size with the 75 million baby boomers, which are between the ages of 51 and 69. Now, the baby boomers, whether they realize it or not, have a great need to see the millennials do well. And in fact, the millennials are struggling financially after the Great Recession. So there was a new report that just came out from the Urban Institute this week, and it just pointed out that there was a 15% drop in birth rates for women in their 20s from 2007 to 2012, so the Great Recession and on. And they looked at the reasons for that, and they said that a lot of it has to do with the economic decline that happened then and the lack of recovery that has persisted since. So add on to that the fact that millennials are underemployed, over-indebted, undersaved, not able to buy into overvalued housing because of it, first of all, because housing is very expensive, and also because they don't have good enough jobs and free cash flow. So what's happening is they're putting off their family formation in terms of even, getting married, even buying a house or looking to form a household, even a rental accommodation. And then they're also not having babies. And so that is a negative because you've got all this aging cohort that needs those young people to pay into the tax system, to pay into the social system, to pay, to buy their financial assets off them if they hope to sell them and, raise cash, which people want to do as they get into their later years. And so that's creating, again, a negative hangover. And this is where I go back to everything that's happening right now, all the trials and tribulations, all the discord and the economic hardship can be traced back to the fact that we let certain corporations and actors run the show, sell everybody everything that was totally devastating to them financially, extract the hell out of the system, get their bailouts and leave, and the rest of the people are left with not enough money to fund the social system and the economy and have growth that'll keep things kind of going. And so,
well, a lot of companies have a policy now that newcomers, to their workforce are paid substantially less than the newcomers to that business were paid, say, 20 years ago.
Absolutely. So there's been a huge shift because there's this lack of employment. Part of that's because jobs went overseas in some sectors, but part of it is because boomers are staying longer. Now we've also got a slower growth world. Don't forget, Jim, that since the Great Recession, we've had, as an example, the U.S., the world's largest economy, has tracked at about 2% real GDP growth. Well, the average prior to that was about 4.45%. Since the Second World War, 4.5% was the average annualized growth rate during recovery cycles. So we've got less than half the growth, and everyone trying to service debt payments that are off the charts. And you've got sort of just a downward pressure on profits. So again, one of the big forces that has driven the profit cycle in the past few years for corporations has been tons of free money floating into the system thanks to the central banks, which has gone into the hands of a few actors, typically financial institutions and multinational conglomerates, who could raise money real cheap and have sold hundreds of billions of bonds in the world to raise money. But then they had nothing really productive to do with that money because there's no real strong growth picture, and we've got overcapacity everywhere. So what did they do? They took that free money, quote, quote, and bought back their own shares primarily. 95% of their corporate profits have gone to buying back their own shares, which makes shares go up in value in the short term, but it just guts the potential for the economy thereafter because they're not investing in the future, they're not expanding, they're not getting more efficient, they're not hiring younger workers, so there's no knockoff, a positive effect in the economy. It just makes asset bubbles that much higher, and that means it just sets up for bigger declines once the rubber finally hits the road. So it's been a very dangerous period, lots of misallocation and wasted money. Now the world is really truly drowning in liquidity and starving for value, and that's where we are right now.
Did that young corporate leader in Seattle who decided to cut his $1 million a year salary to $70,000 a year and boost everybody else's salaries in the company so that the minimum wage there was $70,000? Is that the kind of thing that needs to happen?
Well, I mean, that sounds like a pretty extreme example. I mean, I don't know the facts. I didn't hear that story. But that's, certainly part of it. I mean, one of the things is that this is what I'm talking about, this lack of accountability or empathy or sense of responsibility or any connection between C-suite and workers. The average pay for American CEOs was at 275 times the average worker there, just in the last data that I saw. So obviously that's one of the things that needs to come down. The other major part of this is to stop having executive compensation based primarily on, coming primarily in the bonuses to do with equities. It has to be, in my view, coming in the form of debt. Because if an executive is paid in the debt of his company, suddenly his entire incentives are flipped around. He no longer wants to grow at all costs and deplete the strength of the balance sheet. He wants to make the balance sheet strong and have lots of actual, solvency and buffer so that the bonds remain strong and can pay the interest payments. That's the incentive that we need in the world today. Not this, let's get everyone focused on how to get bubbles in certain assets. Let's go back to trying to grow organic, healthy businesses and wealth for the masses, and then you're going to get an economy worth having again.
Danielle, thank you very much for chatting with us.
Okay, Jim, thank you.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Check out our popular YouTube channel, Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.